see gold prices heading as it consolidates in a broad range?
Yeah, back to gold. I mean, gold is traditionally viewed as a hedge or insurance against inflation. So, we're looking closely at what inflation is doing and the outlook for inflation. And with regards to that, we haven't really seen a lot of inflation recently. So despite these broad-based QE programs, economies are still under capacity, and so, price increases aren't coming through. The other thing that to be mindful of is on QE, we've now starting to see tentative steps by the US to look to a time to when they might exit their QE program. And, that is, of course, ultimately bearish for gold when and if that happens. So, with regards to this, I don't see a lot of inflation. I'm a bull on the United States economy, and, I'm not a huge believer in gold right at this minute.
Crude prices are choppy ahead of the OPEC meeting. How do you read it as U.S. supplies begin to build up?
So OPEC's going to have an interesting bunch of meetings, not just this week, but also the next few months, because they're grappling with a couple of issues. They've got the United States, which has emerged from nowhere, from left field, to become retake its mantle as the world's largest oil producer potentially in a few years. That's a disruptive force on what OPEC is trying to do, which is constrain output and increase prices. The other issue they face is Iraq. Iraq has previously been a member of OPEC many years ago, and they're looking to lift their capacity markedly. This new capacity, it remains to be seen whether they will be brought back into the fold of OPEC, and so that's something they're going to look at. Specifically for this meeting, though, we think they're going to maintain their official quota system of about 30 million barrels per day. So, looking at the Brent price of just over $100, that seems to be holding up, and it's not yet at the level where we think OPEC will look to try to constrain production.
Given the weak growth in China, what kind of impact will it have on base metals?
Obviously, China is enormously powerful as the biggest consumer of commodities in the world, and base metals as well. In terms of, a lot of investors are looking at the price action, prices weakening for many commodities, and questioning, the demand from China. We're not actually questioning the demand. We look at, the trade flows for China, and it all looks very, very normal for this time of year. And, I don't think a worrying trend. It's not really the demand we're worried about. It's more supply. Past 3 or 4 years, we've seen vast investment by the mining community in increasing the supply of commodities, and this is starting to bear fruit. So, we're looking at commodity markets more adequately supplied, and this is what's weighing on prices. So yes, demand is the biggest driver of, commodities, but right now, markets are more adequately supplied, and that's what we're worried about.